All right, good afternoon, everyone. You're welcome to Accounting for Beginners. We'll make accounting very easy for any new person who has love for accounting, be a student, be you an individual, but you want to learn accounting. In this channel, we make accounting very easy for you. No matter your background, you're able to follow us step by step. You're going to understand accounting because we make it easy and interesting. Now, today we're talking about source documents. This is our eighth class. We've had 7 classes so far. Kindly watch the previous video so you can flow with us. Without much ado, let's get right into our topic for today. And like I said, it's what source document. Source document. Now, like the term source document, the name source document. What does this mean? Now, source document simply means the source of your information. Accounting works with what? Information. And where do we get our information from? Where we get our information is where we get our information from is what we call a source document. Are we together? So, like for instance, those that gossip. It's an example I'm giving. I'm not saying people gossip. Those that gossip, they get their gossip story by listening here and listening there. They go here and they listen. They go there and they listen. They now come and sit down and give their what story. AKA, forgive me, I'm just trying to help us know what source documents are. I'm not saying anybody gossip. Just like we have bloggers. Bloggers go around seeing what is happening here and there. And from what they see, they come and sit down and write a very wonderful story and then blog it out on the newspaper, on the social media channels, and every other places. Why? They're able to get information from here and from there. The same thing with accounting. You must get your information from somewhere for you to record, to prepare your books of account, to prepare your financial statement. The information you're going to write should come from somewhere, not from the skies. You don't cook it up. No. You don't imagine them. No. They must be things that actually happen, and then you're going to write them down. Now, because they are written down, you can now use that information to now prepare your account. And where do you write these transactions down? Where do you write what has happened in your business down? You write them in your source documents. Now, there are several kinds of source documents. There are a whole lot of them. A very popular one that we know is our what? Receipts. Receipt is a source document. This is the first place you record the information that has to do with sale of a transaction. If a customer comes to my shop, let's say I sell cement, and Mr. A comes to me and say, Madam, I want 10 bags of cement. In my receipts, I will write 10 bags of cement. Here will be description. I've all seen what a receipt looks like. If you have not seen one, go to those that are there and ask them, please let me see your receipt booklet. Or go to a shop and buy something and say, please give me a receipt. They'll give you a receipt. When you get that, I'm sorry I don't have one here. But when you get a receipt, you see that a receipt have what description of what you purchased. It will also have the dates. Date is usually somewhere here, depending on how the invoice receipt looks like. But there's a place for dates. The date that the transaction occurred. Let us say this occurred on the 12th of December 2025. There will be a date for it. There will be a description of what happened. There will be an amount. A bag of cement currently costs about 11,000 naira. So this times 10 will give me 110,000 naira. So this is the amount of, well, this is what is due to be paid. Now, when the customer pays me this amount, or maybe through POS or ATM, I would now issue him this receipt. Now, a receipt will typically have the name of the business. That will be at the beginning. Maybe my business is Okeke and Son. Okeke and Son. Okeke and Son consumables. So a receipt definitely will have a name. The name of the owner of the business should be there. Most time receipts are printed by those in the printing business. You go and meet them and say, I want receipt booklet. They'll give you a booklet bearing your name, your address will be there. So the address of the seller will be there. So let's say it's number 50 Uzo Street, Anambra. Anambra area is somewhere in the sky. So your address will be there, your phone number will be there. Maybe 070851632. So a receipt booklet will have name of the seller, his address, the date, the description of what he's going to sell or what he has sold, the amount, and then there'll be a place where you have signature of the manager, signature of the person, the customer signature will be somewhere. So when he has paid, he will sign here. Pa 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 pa. And the person that sold will also sign, maybe the manager. Pa 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 pa. So the manager have manager signature one side and then the customer signature one side. This is what the receipt booklet looks like. So it has the address of the seller. It describes what you sold, the date, the amount, and the signature. Now, this is very, very important because with this receipt booklet, if I want to write the sales that I made for today, I'll get all my receipt booklets. And with it, I can write how much I sold. The quantity is there, how much was sold, how much was paid. If the person paid me via ATM or via POS, you can also indicate it. If the person did part payment, you can also write part payment. Let's say this person did not have enough money and said, okay, Ngozi, I'll pay you 50,000 naira. Later, I will transfer the remaining 60,000 naira. I will say, okay, sir. But that my booklet will have what I have been paid. So receipt is an invoice, not an invoice. Is a paper that shows transaction of sales that occurred and they've been paid for. Now, another example of a source document is your invoice. An invoice is typical to your receipt, just that in an invoice, the buyer has not paid for what he paid for what he purchased. Rather, it just describes the item and the amount due. So an invoice is a source document. It's also a source document. It's used to record transactions that occur between the seller and the buyer for goods that he has sold to the buyer. Most times in businesses, most people that come to buy things, they might not have complete cash, they might not even have cash at all. Now, because you have trusted or because you trust this buyer, maybe he's a loyal buyer, he's been buying things from you before, and on this particular day, he doesn't have money. But because you have an existing loyal relationship, you trust him and you know him, you have the confidence to give him this goods of credit. You will give him an invoice. So an invoice is issued to a buyer describing things that you have sold to him, but he hasn't paid for them. So I would have and write somewhere here 110,000 naira is what this person is owing me. When I issue it to the person, let's say his name is Okeke. Okeke would know that he's owing me 110,000 naira. So invoice is to record transactions that have occurred, but they have not been paid for. You're owing the person. Are we together? But in the case of receipt, it's still the same thing, but you have paid for it. So I will give you a receipt. That's why when you go to a bank or you go to where you sell things and you buy and you pay instantly, like some stores, they will give you receipts if you ask for receipts. Are we together? But if you buy something you've not paid for it, the person will give you an invoice so that you will know you're owing him. And not just that, it binds both of you together because you have signed and he will sign. If perhaps tomorrow you're not able to pay him, he will carry that invoice and take it to a lawyer for me and say, Mr. Lawyer, Mr. Okeke came to my shop and he bought 10 bags of cement and did not pay me. Here is the evidence. Most time invoices come in duplicates or triplicates. What I mean is that this part is a part of what has transpired. There's a duplicate page under that has an exact recording of this information. Just when you photocopy paper, when you photocopy a document, you have original, you have duplicate ahead, the same thing. When you write an invoice, there's a duplicate under that doubles what you have written. And so I will take this paper with the duplicate form and go and give Mr. Lawyer. And say, Mr. Lawyer, Mr. Okeke came to me on these dates and did not pay. And it's an invoice. Because it's an invoice, you know he did not pay. But if it's receipt, you will see paid. Most of people use invoice as receipt, but the right was paid. Because normally invoice is used to record transactions that have been paid, that have been sold, but they have not been paid for. But in cases where the person paid, the person write what paid. So to have this invoice and source documents are very, very important as a business owner because it's evidence that transaction occurred. There is no proof that you sold something to Mr. Okeke if you don't have it written down somewhere. Mr. Okeke can deny to man and say, is it me? I don't think it's maybe it's not me, maybe it's my brother or your brother that is answering that name. He can deny it. But because you have proof, you have a duplicate of what has transpired, you cannot deny it. Are we together? So this is also a source document. With this information, I can record sales that have transpired and it will be under what? Credit. Creditor. I will know, okay, sorry, debtor. This person is owing me what? 110,000 naira. So in my sales day book, I'll write it, but it will come as a debtor. I will know that Okeke is owing me 110,000 naira. And why do I need it? Because I wrote it down in my invoice book. That is why, as a business owner, you must record every transaction that occurs. You must record it because you are doing it to protect yourself. If perhaps okay, did nice tomorrow, or something happens tomorrow, it's that book that is the evidence of what transpired. So you need evidence all the time once you're in business. It's not just word of mouth. The evidence is in your paper, in your recording, in your receipt, in your invoice. Those are your source documents. And with this source document, I can now transfer this information into my sales day book and furthermore to my sales account. I'll teach you all that in our future classes. But today we are starting with what? Source document, which is where we get all our information in accounting. So there are source documents for different things. For sales, the source document. For purchases, the source document. For invoices, for expenses, the source document. Now the source document for expenses is your petty cash book. Your what? Petty cash book. So a petty cash book is also a what? Source document. Some call it cash book, some call it cash voucher. All of them simply means you have recorded a petty cash transaction in a book. Now the petty cash book, not petty cash book, sorry, petty cash voucher book is different. Book is the book where you record the transactions that are petty in nature, but the voucher is like your receipts. So it's also a booklet. It has the dates. Under description, it describes what you gave the person, how much you gave that person. Petty cash voucher is used to record petty cash transactions. In organization, there are times you would have need to incur certain expenses that are not very, very expensive. Like for general run of the organization, let's say you want to buy a charge card or you want to transport your staff or you want to pay NEPA bill and it's not so expensive. Petty cash voucher are used to record it. So let's say for instance, Mr. Agoze wants to transport himself from here to the bank. Let's say they give him 10 million and to go and put this money in the bank. He will say, okay, I need transport fare. So under description, I will write transport expense. How much? Let me say it's 5,000 as a transport. To who? Mr. Gozie. So with this, I can record the expenses that I've made for the month. I can know who I gave it to, how much I gave them, and what it was used for. Now, a petty cash voucher will also have signature of the recipient. So instead of having customer signature here, you're going to have signature of the recipient. So recipient, the person that received the money. So I also have signature and recipient's name. So Agozie will sign it for me and will write his name. Name is already here, Agozie. So the name and signatures are already here. And the date will be there. So this is what a petty cash voucher. Petty cash voucher has the name of the business. The address will be there. The date, describing what the money was used for, how much I gave the person, and you're signing to say that yeah, it is Agozie you gave the money to. Not that you wrote Agozie and then another person signed for it. No. This signature binds Agozie. By the time Agozie goes to transport himself and comes back, if let's say he used the money to buy for his car, you will come back and give him what? A fuel receipt. That I will now attach and say, yes, Mr. Agozie used this money that I gave him to buy what for, which he now put in his car. Are we together? So that is a petty cash voucher. So anything that enables you to record a transaction or serve as evidence or reference of transaction that occurred in your business for the very first time, where the information is being recorded for the very first time, is your source document. You also have things like bank statement. Bank statement is a source document. Yes, because if you pick up your bank statement, you will see name of the person that maybe the person that paid in money for you or person that you paid money to, the amount you pay the person, the date you pay the person, or the date you paid the money, you will see it there. So your bank statement is also a source document. So any document that shows you the source or rather gives you information about transaction that has occurred is your what? Source document. As long as it has the date of the transaction that occurred, the amount of the transaction, be it what you received, the name of the person. In the case of maybe somebody paid money into your account, the name of the benefactor, if it's where you paid money, is it the person's account, or you received money from somebody. So look at the bank statement. I don't have one here, I'm sorry about that. But any bank statement to have the date, the time frame, maybe from 1st of January 2025 to December 2025. You will see debit side, one side will be debit, one side will be credit, and you now see your balance. And then you have narration, narrating what's happened. And then the date will be there. The individual date will be there. But you start just maybe 1st of December, that will be the first date. So you have 1st of December 2025. That will be the first date. So let's say narration, most times you start with opening balance. How much you have at the beginning of the period. Maybe 4,000 naira you had. And then by the time people pay money or you debit money from your account, you now have either a debit or a credit, depending. Are we together? So this is what a source document is. It's a document that enables you to get information of what transpired in the business. It's where information are being recorded about transaction. Anything that gives information about the business is a source document, and I'm giving us examples of them. So these are a few. There are a very whole lot of source documents, but the important thing is that you must know what a source document is and know examples of it. And we have done that in this class. I want to thank you so very much for taking our time to work with me on today's video. I welcome you and I thank you, and I wish us a very beautiful day ahead. We'll call it a wrap from me to you, saying thank you. Don't forget to subscribe, like, and share so that more people would learn and benefit just like you are doing. See you in my very next class. Bye.